Without further delay, I welcome Mark Savich. He's Executive Director and CEO of Agrimin Limited. Mark is Executive Director and founding CEO of Agrimin. He has led the company from its initial acquisition of the McKay Potash Project in 2014 to its status as a world-class potash development project located here in Western Australia. A pre-feasibility study was completed in May 2018, and it indicated that the McKay Potash Project will become the world's largest and lowest cost seaborne supplier of SOP fertilizer. Mark is a chartered accountant, CFA charter holder. He has worked throughout the resources industry in Western Australia for the last 15 years. Mark, the floor is yours.
All right, thank you, Tony. It's great to be back at Diggers again this year, and thank you to Diggers and Dealers for inviting us to present. Agrimin is a pretty young company. It was founded in 2014 when we applied for mining tenements over Lake Mackay in Western Australia. It's now turned into become the largest undeveloped potash-bearing salt lake in the world. I'm going to spend the first part of the presentation talking about why there is an opportunity and a need for a new seaborne supplier of SOP to emerge out of Australia over the next few years. And then I'll spend some time just going through our pre-feasibility study, which was completed in May, and then just run through what we're up to at the moment. So, particularly in Asia, the fertiliser market is changing a lot. It hasn't really changed much in the last 100 years, and while first world countries have kept up with technological change, Asia's been quite slow, really, and I guess China's still feeding itself, India is still feeding its populations, but the land is being degraded and destroyed, and that's not going to continue forever. And the backbone of the fertiliser market is the three macronutrients, N, P and K. And so that's never going to change, but the types of fertiliser products and the way that the fertiliser is applied to the crops is changing right now. If we look at just the K part of the fertiliser market, so potash, most people would first think of the Canadian companies and Russians and the Belarusians. If you're blessed with the right chemistry and geology, you can produce a much higher value product, which is sulphate of potash. We are blessed with that here in Western Australia, and hence a great opportunity, because today sulphate of potash prices are trading at twice the price of muriate of potash. And there's a key reason for that. When you look at the demand side of potash, the demand for SOP is far more inelastic. So the types of crops that use SOP, being high value fruits and vegetables and tree nuts, farmers need that fertiliser every year. No one's going to eat fruit and veg if it doesn't look good and taste good. And also the fertiliser cost for a farmer of cash crops, the fertiliser cost is quite a small part of their overall cost base. But if you look at broad acre farming, which MOP is used for, fertiliser is a much larger component, and therefore farmers are a lot more sensitive to the cost of that. In China, and I'm going to talk a fair bit about China, that's mainly our target market. It's on the doorstep of where we are, and there's some big structural changes happening at the moment. In the last 10 years, demand for SOP in China has tripled, and that's been met by a tripling of their domestic production. And we are now at a point where they are going to be unable to maintain production levels to keep up with demand. And that's where the opportunity lies for Agrimin and all of the companies that are looking at salt lakes in Western Australia. When you look at the demand for fertiliser, there's two ways that it can grow. Either the area being harvested for a particular type of crop grows, or the application rate of a type of fertiliser grows. We've got these structural changes now for the SOP market, where we're seeing growth on both attributes of demand. So a rising middle class that wants to eat more fruit and veg is seeing more fruit and veg being planted in China. But we're also seeing farming practices changing, and that's requiring more and more high quality fertiliser. And then on the supply side, we've got these major changes in terms of the environmental cleanup in China that most people would be aware of. And what that is doing is just pushing up the cost base of the high cost secondary producers in China through stricter controls on emissions and acid disposal. So all in all, it's a pretty rosy picture for the SOP price going forward. If we just look at on the demand side, so the changing in farming practices, on the left is a traditional farmer. So if you go back 10 years ago, it was mainly open fields, and About 20% of the nutrients of that fertiliser would be taken up by crops, with the other 80% being essentially agricultural pollution, so leaching into waterways or oxidising into the atmosphere. And if you look at the picture on the right, where you've got a bit more of a sophisticated setup, covered cropping, irrigations installed, up to 80% of the nutrients can be taken up by the crop. And you can see like there's just been these broad changes on, you go onto Google Earth and you have a look, like the main agricultural areas in China have gone from open fields to completely covered, and we're talking tens of kilometres. It's quite amazing, and it's all driven by policy. So the last 5-year plan included a policy of zero growth in fertiliser use after 2020. So the largest consumer of fertiliser has said to the world, we're not going to consume any more after 2020. So what do you think all of the large fertiliser companies in the world are doing? They're looking at how they can adapt their business models to become more sophisticated, and that's going to require SOP. On the supply side, as I spoke about the tightening restrictions on acid disposal, what we're seeing is that's really hurting the secondary producers in China. And we've seen over the last 2 to 3 years shutdowns, and almost 500,000 or more than 500,000 tonnes of secondary supply has come out of the market in China. And to replace that, we've seen salt lakes being developed. So all in all, if we look at where demand and supply is going, and this is again just China data, but if you look at on the left-hand side, I've got the demand picture, and you can see that all of the growth over the last 10 years has come from an increase in application rates, as opposed to a little bit of growth from increase in harvested areas for fruits and veg. When you look at what's being forecast going forward, you can only get forecasts on where demand growth is coming from due to an increase in harvested area. So essentially, forecasters are completely missing the biggest part of the growth equation for demand in SOP. And it's a huge opportunity for us where we can see that's happening. And you're going to look back in 5 years and the forecasters will have missed the biggest part of the demand growth. And then when you look across to the supply side in China, for the small amount of demand growth that they do forecast, they just forecast that being met by a slight increase in Mannheim production in China. Yet on the ground, we're actually seeing shutdowns of Mannheim production. So very quickly, you can see a supply gap emerging in SOP. You can understand why there needs to be seaborne supply coming out of Australia to service that growing demand in China. And that's the opportunity that is really at the feet of Agrimin at the moment. And prices don't lie. So in the last 2 years, China SOP prices are up 30%. And so over the next 2 to 3 years, as we move our project through development, we're going to hopefully have some very strong tailwinds and very supportive prices for SOP. Essentially, our pre-feasibility study, which I'll go through shortly, we assumed a price that is today's price in China. We think there's upside to that, but that's the price that we've gone with, and we generate extremely strong economics. And then the cost curve is obviously crucial to any business, and we are looking to come in at the very end, bottom end of that cost curve. And that's because we'll be one of the few new projects that has come online. We'll be using modern technology, and we should be able to be extremely competitive. So moving on to our project. We're situated 800 kilometres south of Wyndham. We're proposing to essentially truck our project north to the Wyndham port for shipment. We own mining tenements over the entire Lake Mackay on the border of WA and Northern Territory. We have a native title agreement now in place for the full-scale development of the project, and that was probably one of the biggest milestones that we've achieved to date, and we signed that agreement back in November last year. The pre-feasibility study was completed in May. We've got the definitive feasibility study underway, but most importantly, a lot of the long-term pump testing and evaporation trials have started back in August last year. The pre-feasibility study indicated a production rate of 426,000 tonnes of SOP at an all-in sustaining cash cost of $256. So that's an extremely attractive margin based on current prices of US $550, and should see us generate an EBITDA of US $137 million a year for a very long mine life. So this could be a very, very significant cash-generating business right here in Western Australia. The capital cost is $409 million, and when you put that in the context of a highly concentrated market with very significant barriers to entry, this is a very small entry price. Looking across the globe at various greenfield development projects, if we do see the emergence of a large-scale seaborne supplier of SOP, it's likely to come out of Eastern Africa or Western Australia over the next few years. And we think that gives us a very good opportunity to hopefully move our project very quickly with a lot less risk. What's unique about Lake Mackay and why we're out in the middle of nowhere? Well, it's WA's largest salt lake. It's 100 kilometres from one end to the other, and essentially the water table sits at 40 centimetres under the surface the whole way. So it's very, very cheap and easy to extract the brine. We have a very, very large homogeneous deposit. We have very large lake surface to build evaporation ponds. Any leakage from those ponds does just seep back into the natural salt lake, so the environmental concerns are very low. And we've got the right brine chemistry to actually produce SOP. The development plan is to essentially install 550 kilometres of trenching down to about 4.5 metres deep across the salt lake. The brine will passively drain into the trenching network and drain south to a feed channel. We'll have 2 pumping stations to regulate the brine flow to the evaporation ponds. The ponds are situated on the western bank of the lake, which has very low vertical permeability. We'll go through a process of fractional crystallisation to precipitate potash-rich salts in the final pond, and those salts will be harvested via dredging and pumped to the processing plant for production into SOP. We've had a team now, we've been mobilised at site permanently since August last year, so we've been out there for a long time working very hard. We're very lucky to have very motivated and I'd say industry-leading team of people out there. The operating conditions probably don't get anywhere more difficult in Australia, and you know, I guess if it's not hard, why do it? We have produced now multiple batches of SOP through test work. We've sent that SOP to various off-takers, and the feedback has been extremely positive. We can produce very good quality SOP with the brines here in Western Australia. The process flow sheet is very conventional. You're really looking at essentially harvesting salts, flotation, decomposition, and then thickening. And you can see it's quite straightforward. It's used at many operations around the world. At that point, we'll load it into trucks and truck it north. The project is remote, and pulling together a logistics chain is very important to us. What we're looking to do is essentially fill quads, 114-tonne payload, with a loadout bin at the site. They'll drive directly north, 980 kilometres north to Wyndham Port. At the moment, we're looking at securing some cheap real estate up on the waterfront. We'll have a large storage shed, a finishing plant. At the moment, the port can ship out in 15,000-tonne vessels. With a few $100,000 worth of dredging, we can get that up to about 30,000-tonne vessels, so it's absolutely perfect for meeting the requirements of what potential off-takers are telling us that we need to do. This is the delivery schedule. We're targeting first production in 2021. We think that's very realistic. It's going to require a lot of hard work and a lot of money, but we have a very clear strategy on the path forward to execute here. We have spent now 3 years of building relationships with large potential strategic partners and off-takers, and we're hoping that's going to pay dividends as we get to the pointy end of securing binding off-take and project financing. We have a very clear strategy on how we're going to finance the project, and we're happy to obviously take that offline and talk you through that. But you know, fair to say that really at the beginning of our DFS now, we're putting in place all of the steps through DFS execution and project financing. Last slide, which is just the corporate overview. So today we've got a market cap of about $145 million. We've got cash of $14 million in the bank, so we're well funded to progress through the DFS. The register's evolved quite a bit since I was here last year. We've got a good representation of institutions, mainly Australian institutions, but that continues to grow, which is positive. It means the story is getting out there. And you can see the share prices, that's a 4-year price chart, and the price is generally traded and reacted to milestones, and we do have a lot more milestones coming up. And as the belief in this industry grows, we do have the #1 asset, and we had the first mover advantage in securing that, and so we're in a very good place to hopefully make the most of what this looming supply gap for SOP. So thank you very much for your attention. Please come past the booth. If there's any further questions, we'd love to talk in more detail about the project. Thanks, Tony.
Thank you, Mark. Do we have time for one question? Anyone? Great, we'll leave it there. Thanks again, Mark.
Thank you.
We're now taking a short half an hour tea break. Please return by 3:20.